Scott here. So I just wanted to do a little short video here on the Euro Aussie currency pair for this sample of price action back, let's see, January 2019, December 2018. And I thought this was really interesting because, okay, so first of all, you see I got my quadrant box set up on the monthly chart. So I have the active high and the active low. And what was interesting is as this trend began to move up, as it began to move up to this internal high right here, price did actually sweep out the highs that were sitting here and then just sat in here and accumulated below equilibrium, but it did not take out the high. So if we look closely, we can see that. So if you follow my crosshair, you will see that this high does not breach this high, does not make a new high. All right, but you see this double top forms right here, and then it sells off, does not break the low, and then look what happens the following month in December of 2018. But so you get this bullish engulfing outside bar. This is a clear bullish engulfing outside bar. When you see this on a monthly chart, this is like one of the, it's like a golden cross in some of the traditional circles. I mean, this is an amazing piece of information here. So look what happens. Notice the high does not come up to the liquidity pool sitting above these highs right here. So for anybody who got short, they would use protective stops in the form of buy stops that would be sitting above this, and interestingly enough, above equilibrium. But then notice the following bar in January, the price breaches above the bullish engulfing outside bar. You can imagine people are just watering at the mouth to just get in long on this, right? So price runs out the liquidity pool, again, does not take out the high, and then sells off, and then look what it does. So here's the method. Price closes below equilibrium of this big, massive, wide range bar, okay? And then it just goes into accumulation, okay? So then you have to ask yourself, okay, boom, if this means price wants to go lower, then the question is how lower? We need to let the price basically play out and tell us. So this is a really great clue. Yes, it wants to go lower, but whatever it does after this is very, very important. This is why it's important to look at the monthly chart. So what it does is, look what it does. It forms a double bottom. Interestingly enough, we formed a double top here. We saw price run out the double top liquidity pool here, but not take the high out. So, so we have some interesting clues here, right? So we just stop and think and say, well, look what happens here in January and in February. We have a double bottom forming. So now if we go to the daily chart, we are going to see a traditional pattern set up. And this is what's beautiful about this, is this method actually validates traditional patterns. Okay, so here is the daily chart. So here's the run above the buy stop pool up here. Price runs down, forms the double bottom here. And you can imagine people are just, again, just, you know, very, very eager to get in long because they see the monthly bullish engulfing outside bar. And then look what happens. So as price begins to move up, it moves up in a sort of kind of three drive fashion, right? So 1, 2, 3, right? Not very uniform, but it is very much a three drive. And then look what happens. Price, the structure begins to break down, and then here we go. We're moving toward the liquidity pool down here where we've accumulated some nice long positions, smart money, of course. And then look what happens. Traditional falling wedge, below equilibrium, right? This buy stop or this sell stop pool here. So for anybody who's already been long, well, they're going to put their sell stops down here because they look at it in the monthly chart and say, hey, boom, we've got a double bottom. It's safe. It's support, right? Well, look what happens. This thing just kind of compresses into this, right, in a falling wedge pattern. And then take a look. This is a falling wedge pattern. So when you see these, so it's not bad to learn traditional patterns, but these always take back seat to what I see utilizing the method, right? Equilibrium concepts, and of course, just deducing some very interesting price action on the monthly chart. It's not that difficult to deduce. The more and more you keep doing this, the more it'll start to become more clear to you. But this was certainly a great opportunity to start looking for longs. So anyway, I thought I'd share that with you. So the overall summarization of this is that traditional patterns are qualified utilizing these equilibrium concepts. Thanks for watching, friends. This video is roughly about 5 minutes. I hope you're enjoying the content. Take care. Bye.